and 7.9% on a national basis. And in Spain also, it is around 8.7%. And Germany, as you all know, is the most anti-inflation country in the world. And even they are experiencing both wholesale prices or producer prices and retail inflation at unprecedented levels. And in the UK, for example, the Monetary Policy Committee expects inflation to be in double digits in the second half of the year. So in that sense, India's problem of handling inflation above 6% threshold, which is the upper end of the inflation targeting band, isn't an isolated case, but in fact, India is somewhat better than several developed and developing countries with respect to the inflation problem it is currently facing. And the government has been very proactive, as well as the central bank, in countering the inflation pressures. The central bank has caught up with the inflation rate by beginning to raise the repo rate both in the scheduled meeting as well as in the intra-meeting rate hike in May. The government has record food grain production and buffer stock levels that should limit a flare-up in prices. The duty structure on edible oils have been rationalized, and it has also extended stock limits on edible oils. States and union territories have been sent advisories to set up price stabilization funds. And energy resources are being diversified beyond the traditional hydrocarbons. Ethanol blending is now at a much higher level than before. Of course, on top of the duty cuts that were made in November 2021, just about a week or so ago, central excise duty on petrol and diesel have been lowered as well. A subsidy of 200 rupees per LPG cylinder to over 9 crore beneficiaries under PM Ujjwal Yojana has also been offered. And export duties have been imposed on steel and iron ore to cool domestic prices and to make sure that there is domestic availability and supply. And of course, fertilizer subsidies are increasing based on the government's expectations of fertilizer prices, such that the input cost to farmers are kept low, and therefore the entire global run-up in fertilizer prices is absorbed by the fisc rather than being passed on. The fiscal deficit shot up in 2021 thanks to the pandemic, and 21-22 we all just learned that the fiscal deficit as a ratio of GDP is at 6.7 against the budget at 6.9%. And the good thing about this is, as you all might have noticed, the capex spending on government budget, which was expected to be 6 lakh crores, was almost met fully with the on-budget expenditure of 5.92 lakh crores, government's capex spending. And if you look at the data for April, which was also released today, against the budget at 7.5 lakh crores capex, the month of April witnessed almost 79,000 crores of capex spending on the part of the government. So therefore, the higher employment and growth multiplier effects of capex is well known, and the government's commitment to ensuring that not only budget allocations but also actual expenditure keep pace is evidenced in this data for 21-22 and for the month of April as well. The silver linings that India has, and I've been mentioning this in all my interactions with the private sector and with the media over the last 3-4 months, is that India paid its growth dues in a way in the previous decade due to the balance sheet adjustments both in the corporate sector and in the financial sector. The fact that we are starting this decade and facing the current global uncertainties and headwinds with a well-capitalized and reasonably robust, healthy banking system and the non-financial corporate sector is a good augury and a good basis on which to build the growth expectations for the coming decade once the current headwinds abate. The non-food credit growth is beginning to creep into double digits, and therefore we expect that after a decade of stagnation of bank credit to GDP ratio, it should start rising in the course of the rest of this decade as well. And as I mentioned earlier, the capex push is not just in the budget numbers, but also in actual delivery. The geopolitical situation, of course, any story for any country in the world today isn't without headwinds and uncertainties. India, therefore, cannot be an exempt from these global forces. because as you might have noticed, the export and import share of GDP of India is close to 50%, both put together. So we are going to be affected by what's happening elsewhere in the world. India's GDP growth estimates had indeed come down from a high of 9.5% to around 8% on some estimates, and RBI itself had lowered it to 7.2%. So at the moment, based on the momentum we are witnessing in contact services, etc., the 7% handle should hold for the 22-23 year. Of course, any statement is subject to considerable uncertainties as we face this year. The outlook, therefore, is that the recovery has been consolidated and reinforced, notwithstanding the Omicron variant mild wave we experienced in January. And the pre-pandemic levels of activity have been captured in several sectors. There are headwinds to growth coming from global situation, high prices of commodities, tightening monetary policy in most countries, including in India. Supply chain bottlenecks, some of it due to the lockdowns in China, might be evident in data in June and July. And the potential global recession and asset market corrections will have impact on sentiment, and the wealth effect will also have a slight dampening effect on global activity. And should there be a recession in North America because of monetary tightening and commodity prices, that will also impact trade volumes, because export growth was a very shining success story for India in 21-22. However, I emphasize that the silver linings that India has is that it is better placed than many other nations in the growth inflation trade-off, and the financial sector is in robust health. And I'm going to leave you with this last slide. When I keep talking about the relative strengths that India has, you can see on this chart, which is a growth inflation axis on both axes, and it's a scatter plot, so to speak. If you are on the bottom right quadrant, then you are experiencing stagflationary conditions, high inflation and low growth. If you are on the left bottom quadrant, it is low inflation and low growth. If it is in the top left, then it is low growth and high inflation desirable. And if you are in the top right quadrant, then you will be facing high inflation and high growth. India is somewhere in the middle of the pack with pretty decent growth rates compared to several other nations. The only one that is doing very well, unsurprisingly, is the commodity producer, Saudi Arabia. So on balance, considering the massive challenges that the entire global economy is facing, India is better placed than others to weather the storm and look ahead to consolidating the growth story that has built in quite nicely over 21-22. I rest my remarks here. Thank you for listening. Now I'm open to questions.
Sure, sir. I think I would request everyone to be muted except the person who's asking the question. Easier communication. And those of you who want to ask questions, could you please put messages in the message box of the screen? We can start with Shishir.
Sir, Namaskar, Shishir here from Hindu Business Line. Sir, my question is that with the high rate of inflation and also high rate of income, with the sequential...
One second. May I ask those who are not speaking to mute their lines, please?
Hello?
Please mute your lines. Thank you so much.
Yeah. अभी time लगेगा इसमें.
You please mute yourself. Those who are not asking questions, it is not permitted.
I'm not able to hear the question that is being asked. Thank you. Please continue.
Sir, Shishir here from Hindu Business Line. My question is that the inflation is at very high level. Sequential growth rate is down. Unemployment rate is also high. Are we facing or is there any threat of stagflation, sir? Thank you, sir.
Sequential growth was low because of the Omicron wave that we experienced in January. But as I mentioned earlier, considering the fears and concerns expressed by many, the sequential growth, the year-on-year growth rate at 4.1% indicates that the momentum is intact. And if you look at the April numbers on GST, etc., there is considerable momentum in economic activity. Now, as far as the inflation rate being higher, as I mentioned, it is high, no questions, compared to the range of 2 to 6% that central bank is targeting. However, compared to, again, the experience of many developed and developing countries, India is somewhat better placed. And more importantly, both the central bank and the government are seized of the problem and are addressing them. I would at this stage say that stagflationary risks for India are quite low compared to the rest of the world.
Thank you. So can I, Shubham Batra from the print?
Hello, sir. Shubham here. So could you throw some light or could you give an assessment on how do you assess the fiscal situation in the current financial year, given the recent steps to curb inflation by the government have eliminated some of the fiscal buffers that we had in the budget?
That's right. The budget started out with a considerable degree of buffers through the nominal GDP growth, the calculation assumption made, as well as modest revenue assumptions and tax buoyancy. Yes, the fertilizer subsidy outgo that is expected this year, the extension of food subsidy until September, and the excise duty cuts will have an impact. And at this stage, it is because we are barely into 2 months into the new financial year. May I request those who are not speaking to mute their lines, please? Thank you. And therefore, at this stage, any attempt to estimate where the fiscal deficit would end up, 10 months of the year are still in front of us, would be highly speculative. So there is a very good chance that the final number would end up closer to what we estimated for the new current financial year, because I think it is quite possible that nominal GDP growth turns out to be much higher than the 11% that was budgeted. That is the best one could say, because the financial year is still very at its infancy.
Thank you. Thank you, sir.
Meghna Mittal from ET Now. The others, please mute yourself.
Sir, the overall FY22 numbers also have come a little bit tad lower than the earlier estimates. What are the factors that have played into it? And I also wanted to understand, how do you see the impact on the contact intensive sectors in this year ahead?
So I don't think the 21-22 numbers have come in lower than expected. If you look at the preliminary estimates, and then this the earlier the numbers are pretty much in line with the 147.7 lakh crores on real GDP and 236.6 lakh crores on nominal GDP, which was anticipated. In fact, the final numbers have come very close to those original estimates. Therefore, it is difficult to make the argument that the number that we have got for 21-22 are anywhere lower than what we had anticipated earlier. And as we discussed, yes, the contact services are indeed improving, and that is reflected in the services activity. The PMI numbers indicate that, and as well as the GST numbers confirm. And you can also observe, based on the resumption of air travel, etc., and footfalls in shopping malls, etc., I think the contact services activity are beginning to recover. And heavens forbid, hope there is no other resumption of pandemic or any other variant, then I think we should see a strong momentum in contact services areas.
Thank you. Sapna?
Thanks, ma'am. Hi, sir. So one quick one. You mentioned at some point in time, in case there is a recession in North America, given the various factors that you mentioned. So, I mean, I may be slightly speculative at the moment, but just want to understand, there's no fear of any recession setting in the Indian economy, right?
No, I think the way we understand recession in the developed country context is very different from the way we understand recessions in developed countries, first of all, in developing countries. And at this point in time, I would very happily, if you offer me a bet, I would take a bet against recession as far as India is concerned.
Arup Roy Chaudhary from Business Standard.
Good evening, Dr. Nageswaran. Sir, there have been many commentators saying that more than the war, it is the sanctions by the European Union which are causing the inflationary pressure, and they are not serving their purpose in ending the war. So, what would be your comment on that, and how would that impact our own economy if some European Union nations withdraw the sanctions to some extent?
It is very difficult to sort of speculate on the factors that are driving inflation. In fact, one could globally, I'm speaking, and one could even go back to the pre-war times when concerted fiscal and monetary expansion over the previous 2 years have already set in motion the inflation train. Therefore, I think any exercise short of a formal empirical analysis to attribute and isolate the causes to inflation would be at this point in time a speculative exercise. But all of them have played a role for sure.
Monica?
Hello, sir. So this is Monica from the New Indian Express. So you said that the recession is different for a developed country, recession is different, and for developing, it is different. So can you speak in a little detail on that?
No, basically what I want to say is developing countries don't normally experience recession. They experience growth slowdowns because of their huge catch-up potential. So for example, in a country like the United States, although people formally understand recession as 2 consecutive quarters of real GDP contraction, in truth, when the NBER actually dates a recession, they look at multiple indicators like industrial production, orders for durable goods, etc. So as far as India is concerned, I do not see the prospect of recession either as defined in the West or in the United States, or for that matter, even is understood in the international, in the developing country context.
Can you mute yourself, please? Someone is in the car and unmuted. Roshan, someone please mute yourself.
Thank you. So in the developing country context, even a pronouncedly lower growth, which would be considered equivalent to a recession in the developed country, that is not something that is on the cards as far as India is concerned. So for example, for the world economy, if I'm not mistaken, IMF would classify a growth rate of... Could somebody mute their lines if you're not speaking, please? Okay, so for example, in the global context, the IMF would consider a growth rate of less than 2.5% as equivalent to a recession. So you can't say that global economy will be in a recession only if there is 2 quarters of contraction, as it is done in the case of the US. That is what I meant by saying the way you understand recession is very different for a developed world and for developing world. But in any case, regardless of this semantic or theoretical distinction, I do not see the prospect of a recession in the Indian economy for 22-23.
Okay, sir.
Tarun, from Z Business. Tarun is not there. So Anuradha, then I'll call you out, Alok. Anuradha.
Sir, both GDP numbers and the fiscal deficit numbers, they have done better than expected. Going forward, given the fact that the war situation is still not very clear that what is going to happen next. So what according to you will be the biggest challenge for the economy? Number one. And number two is that RBI has said that there is no brainer that they are going to increase the interest rate. So in that context, how do you see it will affect India's growth prospect?
I'm sorry, I'm not hearing the last part of your question very well. The first question is, what is the biggest challenge? Is that what you asked?
Yeah, going forward with given the fact that the war situation is still there, inflationary pressure is still high. So what according to you is challenge for growth?
तुम को लिंक चाहिए उसका जो प्रेस कॉन्फ्रेंस दे रहे हैं.
Gentlemen and ladies who are not speaking, please mute your lines. I have to listen to Ms. Anuradha Shukla. Thank you. Could you please repeat what is the biggest what?
Biggest challenge going forward?
No, I suppose there are multiple challenges. One is the tightening that is happening in central banks in the developed world. The other is the possibility of commodity prices going up even further due to the situation developing the war situation worsening or with the oil and gas embargo, etc., coming into play. So there are multiple ways in which things could become a lot harder in terms of growth inflation trade-off. But again, I repeat, it would be much harder for other countries than it is for India. And second, I don't comment on RBI's monetary policy in public. So whatever conversation I want to have with them, I'll have with them separately. What was your third question?
Sir, I said that that they are going to increase the rate. How it is going to affect the growth prospect at the time when we are still recovering? Like
sure. I mean, so in general, sometimes interest rates becoming normal need not necessarily be an anti-growth move, because you are coming from an extremely low real rate of interest to a low real rate of interest. So only when real rates become highly positive, they become restrictive on growth. So a process of normalization of interest rates happens when the economy recovers and credit demand picks up. That's quite normal. So the price of credit should reflect the demand for credit. And in a way, the central bank is acknowledging that. The central bank's confidence to raise interest rates is also a sign that the economic recovery is growing roots and taking hold, and therefore there is no need to fear. Therefore, any monetary policy tightening need not necessarily be anti-growth, especially when real rates are still on the lower side.
Thank you. Alok Priyadarshi, CNBC आवाज.
सर मैं आलोक प्रियदर्शी CNBC आवाज से. मेरा सवाल यही है कि जो मेजर सेक्टर जो कि ग्रोथ में कंट्रीब्यूट करते हैं, जैसे कि कंस्ट्रक्शन, मैन्युफैक्चरिंग, सर्विसेज और हॉस्पिटलिटी सेक्टर, ये देखा गया कि क्वार्टर 4 में काफी ग्रोथ इनकी ठीक नहीं रही है. तो क्या इसका माना जाए कि जो डिमांड में इस वक्त कमी है, डिमांड नहीं है इकोनॉमी में, इस वजह से ये जो ग्रोथ है इसमें कमी देखने को मिली, और इसके लिए सरकार काफी दिनों से प्रयास भी कर रही कि इन तमाम सेक्टर्स में काफी ग्रोथ हो, तो वो प्रयास कहाँ तक आते हुए दिख रहे हैं, प्रयास का फायदा?
It is difficult to expect instantaneous responses on the part of the economy to the measures that the government is taking, and in fact they are showing impact. That is why I discussed in my presentation the capital expenditure at 5.92 lakh crores has contributed. Government expenditure in Q4, fiscal Q4 was showed a very robust growth compared to the Q4 of the previous financial year, and export performance is partially reflecting better global demand conditions and as well as the government's PLI schemes. And going forward in this financial year, the 7.5 lakh crores capital expenditure would lead to downstream growth in both employment as well as in orders being placed on contractors, etc., diffusing into growth rates for them as well. So I think the fact that we are still having a growth projection of between 7 and 8% is a demonstration of the positive outcomes that are coming from government efforts over the last 2 years, continuing into the current financial year as well. And it is what will add a further momentum and sustainability to that growth is when the private sector capital formation begins to kick in on the back of what the government is doing with respect to capital expenditure. And that has been pushed back, unfortunately, by various external shocks. One was the pandemic, then the Omicron variant, and then the war in Europe, etc. To some extent, all of this is holding back both consumption spending to some extent and therefore private sector capital expenditure as well. So once these clouds dissipate, then I expect a much more robust response from the private sector as well to come through, hopefully in the second half of the current financial year.
Thank you. Rajiv Jaiswal from BIZ Hindustan Times.
Good evening, sir. Rajiv this side.
Good evening.
You said much harder for other countries than India. I mean, the current situation, inflation and other things. What is the basis? Could you please elaborate?
So I think the reason is that India has a large domestic economy component. India has ensured, second answer is India has ensured adequate availability of food grains, fertilizer, etc. In fact, if you read, for example, you are from HT, right? Okay, so for example, today we have an article by Dr. Ajit Ranade in Deccan Herald who writes about the resilience, economic resilience of India that has built up over the last 8 years. So we are more resilient, and that shows up in the buffer stock levels, in the foreign exchange reserves, in food grain, fertilizer, etc. And the third important reason, in my opinion, is that I mentioned it in my presentation as well, the Indian financial sector is in far better health than before, and that is other reason why India is better placed than other countries. Our external debt is extremely low, so we are not looking at exchange rates making our external debt servicing more expensive compared to others, etc. These are the 3-4 factors that I would say distinguish India for the better compared to other countries.
Thank you very much.
Money Control wanted to ask a question. I couldn't get the name. I think they are not there. So there was a repeat request from Sapna.
Thank you. Mic is not unmuting.
We can hear you.
We hear you. Now you have gone on mute. We were actually hearing you.
I think no more questions. We are done. Tarun, if you are around,
Thank you, Dr. मैं शैलेश मैं एक सवाल पूछना चाहता हूँ सबसे.
शैलेश from ANI, शैलेश पूछिए. ओके करिश्मा.
It's unmute.
सर जैसा कि अभी एक्साइज ड्यूटी कम हुई है और महंगाई को कंट्रोल करने के लिए कुछ थोड़े बहुत उपाय किए गए हैं, तो क्या इतना एक्साइज ड्यूटी कम जो कटौती की गई है ये काफी है या आगे फ्यूचर में आप और कटौती इसमें देख रहे हैं? और दूसरा, स्टेट्स के लिए क्या बोलेंगे सर जो एक्साइज ड्यूटी कट की बात करते थे लेकिन वो वैट अब कम नहीं कर रहे हैं?
Those who are talking about excise duty, they are not decreasing that. What will you say about those states?
I would probably not comment on what the states ought to be doing and what they are doing. Each one knows their fiscal compulsions and how they can reduce the burden on the ordinary people. And therefore, it is up to the state governments to decide on their trade-off as well between their budget balance as well as the providing relief to the common man. And as to whether the government of India itself would engage in further duty reductions, that again will be a speculative answer to give at this stage. It all depends on how as I have been saying in the last 4 months, how persistent oil prices will be at continued high levels. So it will be difficult to provide a roadmap at this stage in the current environment in the world where there is considerable uncertainty. Therefore, we have to accept that certainty is a luxury that we cannot afford at this stage, and we have to take one step at a time.
I think let Karishma ask, then we'll come to you, Sapna. She's not asked a question. Karishma,
good evening, sir. This is Karishma here from Business Today. In fact, it's more going to be like a follow-up question to what Shailesh asked. Earlier, you had said that if crude continues to be at a high price, then there could be some kind of changes that could be expected in the fiscal policy. Do you think we are already there?
So that is why we got the excise duty reduction just about 10 days ago. So, because the crude oil price that began to rise from last year itself and then began to rise sharply in the course of the current calendar year after February when the war erupted, had persisted around $110 for quite some time since February, and that is one of the reasons that prompted the government to act. And let's not forget, relief is coming to the households to the extent that the government is able to do so, not only through fuel price reductions, but also through other mechanisms such as free food that has been extended until September, etc. So the policy challenge for all countries, and including for India in 22-23, will be managing this sort of troika of growth, inflation, and fiscal balance. And I think it will be very difficult to sort of spell out in advance how each step will be taken at what point in time, etc. That kind of certainty is not given to any country at this point.
Then Vikas has sent me a question. I will ask that.
Dr. Nageswaran, I have a follow-up question related to that.
Let Sapna ask Arup, please.
Sir, just one quick one. Quite a bit of relief measures have already been announced by the government. So is it going to be a bit of a pause situation in terms of, watching out for the impact of the measures both by RBI and government? So, not really looking at any further measures immediately. You will wait for an inflation imprint for a month or 2 months more before deciding, or will it be the crude around 120 that may prompt the government? I know a bit of a speculation, but...
Yeah, as you directly put it, it's a bit of a speculation, and I don't want to engage in far too much of...
Broadly, sir, very broadly.
No, I mean, there's no point in speculating at this stage. We just had a duty elections and we will watch. So it's too early to speculate on that. Right?
Dr. Nageswaran, just a small follow-up question. Given the inflationary realities of the day...
Could you speak when I ask you to speak, please? 1 minute. There's a question from... Okay, you ask the question. Please.
Okay, just a small follow-up question, sir. Given the inflationary realities of the day, do you think it is time to take a relook at the 4 plus minus 2% medium-term inflation target by the policymakers?
I will leave that. You should direct that question after the June policy meeting to RBI. I'm not the one to answer that.
Thank you. So there's one question from Vikas from the Hindu. He doesn't have a functioning mic, okay. So I'll read it out. That manufacturing GDP has contracted in the Q4. Can you mute yourselves, please? Manufacturing GDP has contracted in the Q4, right. The only sector to see a drop. How do you interpret this, and how do you expect this to improve in the quarter or the coming quarter?
I think again the manufacturing drop, it is very difficult to come up with a pinpointed list of reasons, and again I would attribute that to the effect of the Omicron variant affecting with lockdowns in several states spilling over into February as well. And I think what we are seeing is that industrial production has indeed recovered in the course of the course of the remaining months of the last financial year and into April as well. And therefore, at this point, I would say that that probably would turn out to be an aberration as far as the contraction in manufacturing was concerned.
Any more questions? I missed one. Someone had put it out. By the time I saw the screen, it had gone off. Any more questions?
Yeah, ma'am. Ma'am, sir, Tarun from business.
Tarun, yes, you.
Yeah, sir, एक तरफ आपने एक्साइज ड्यूटी कम कर दिया, दूसरी तरफ इलेक्ट्रिसिटी के जो प्राइसेस हैं वो भी एक्सचेंज पे कम हो रहे हैं क्योंकि रिन्यूएबल एनर्जी की सप्लाई आ गई है, और आईएमडी का भी फोरकास्ट है कि जो मॉनसून है वो सही रहेगा. तो आपको लगता है कि इन कमिंग डेज वी विल सी द इन्फ्लेशन विल कम डाउन इन नेक्स्ट 2 to 3 months, sir?
So look, I mean, we cannot do a partial analysis that if one particular component that feeds into inflation goes down, inflation will come down. That would happen only if other components stay equal or do not change. If, for example, there is a relief on the energy side, and if by some chance food prices rise for different reasons, or some other component gets affected by either global or local trends or some one-off shock. Therefore, it is very difficult to engage in this partial analysis and say energy prices, if they drop, then inflation will drop, which means all else remaining equal. Of course, if energy prices go down, then inflation will drop as well. And certainly, I think there is always the food price pressure happens in this interim period between the two cropping seasons. So hopefully food prices will abate as well, and the base effect will also help statistically in bringing down the inflation rate. And more importantly, government's various policy action, both with respect to stocking as well as with duty reductions and RBI's focus on raising the cost of storage and coding, etc., will all contribute towards keeping inflation increases going forward under control.
Thank you.
Thank you. Everyone, thank you to Dr. Nageswaran. Thank you, sir.
You're welcome, and look forward to interacting with you.